This is Rani from Asrani CPA Professional Corporation. Today our topic is business ownership, proprietorship, partnership, and corporation. So we'll discuss all these three types of business ownership. The people who are interested in doing the business should know a little bit about that, so it's easier for them to decide which type of business setup they want or how will be beneficial in their individual circumstances. So first we'll discuss proprietorship. So proprietorship is one person operating the business without forming a corporation. The income of the business is taxed in the hands of owner and at the personal income tax level. So this is considered to be the self-employment and is included in the personal income tax of the owner. For 2019-20, the highest tax bracket here in Canada, Ontario, is 53.53%. So you can see the tax rates are very high for the sole proprietorship. That's also depending on how much income they have, depend on that. So but this is the highest tax bracket, 53.53%. So now let's talk about the proprietorship advantages. Setting the first and the simple is the business setup is very easy. You don't have to open a get a corporation, set up the separate bank account or anything. You just start the business, and it's as simple as it goes. So proprietorship, of course, is, as mentioned, is less regulated, and the is very easy and less costly from the corporation. So it's easier to set up, easier to operate, and of course as you are doing business yourself or individual, so you have full control of the business and you'll get all the profit of the business. So all income and loss is all yours. So if you make profit, it's yours. If you make a loss, it's yours. But the disadvantage of this type of setup is the unlimited liability. Of course, the unlimited liability, that all the if business has any risk or anything, any loans, any debts, or any if somebody sue the business, so all this they fall on the owner of the business. So like you and business are not separate, you are one together. So any loss or any thing that is has to be personally risk. Owner's assets are personally risk. Like if you have a house or a car, if somebody has sued you, then these all your assets are at risk. So as mentioned, that business if it's profitable and it's a more like profit, you can say over $200,000, then the highest tax bracket in Ontario, Canada, Ontario, is about 53.53%. So other biggest risk is the continuity of business. Say for example, if the owner dies or become incapable of doing the business, then the business cannot continue and the business may collapse. So this is the risk for the proprietorship. The second form of business ownership is partnership. So partnership is also unincorporated business. It is similar to proprietorship, except that two or more people or entities can join hands together and form partnership. And also the income in this case also will be divided between the partners. So if we have two partners, whatever the profit will be, then it will be divided between the two partners, and whatever the loss is also divided between the two partners. And also the income from the partnership is also taxed on your personal income tax return. So now let's talk about advantages and disadvantages of the partnership. So advantages is similar to what we discussed about proprietorship, that is setup cost is low and is less regulated as compared to corporation. And business losses can be offset with any other income you might have. Say if you are working, you have a business loss and you have a salary income, then you can offset business loss in proprietorship and in partnership. So that's the advantage for the partnership and also proprietorship. And also there will be a broader base of experience and knowledge and skills available. Say one person is good in marketing and other is good in accounts, both joined together, and that may be advantages to grow the business to be successful. So these are the advantages of the partnership. The disadvantage is same as a proprietorship, that the liability is unlimited in case of somebody sue you or any other business loan or something that happened. Then the partners personal assets are not safe, and they are also on the line for the to pay off the debt or any other loss that company might incur. So that may include your car, your house, or any other investment you might have. So this is the major disadvantage of proprietorship and also the partnership. The only exception in the partnership case, that except you have limited liability partnership, that the one partner in that is one partner is general partner who takes all the responsibility, and other partners in the firm is limited to their investment. So they have a limited liability, but still one partner as a general partner has all the risk on its part. So the other is same, that even in case of death or retirement of one of the partner, then the liability of the partner and also the continuity of the partnership, unless they both agree that to take another person as a partner, or the one partner can buy out the other partner. Otherwise, the most likely scenario would be that the partnership may dissolve. So that's the another issue with the partnership, the continuity of the business or the partnership. So now we come up with the third business entity, or that is a corporation. So proprietorship, partnership, and the third one is the corporation. So corporation is a separate legal entity. So it's not like a partnership or proprietorship that is only persons that are dealing with, and also tax as a personal tax return. But the corporation is counted as a separate from the person, so it's a separate legal entity, and it can be formed federal corporation, or it can be a provincial corporation. So the corporation issue shares to the shareholder that may include the family of the the owner or the main person who is running the business. So, and also it's important that how the type of shares, if you want to use a preference shares or general share, then you have to protect your who is getting how much shares, just to protect your corporation from the takeover or these things. So being the corporation as a separate legal entity, so it pays a corporate tax instead of personal income tax. So that's a separate, and you need to have the separate books, business account. So everything you need to keep separate from yourself or owner who is running the corporation, as the corporation is a separate legal entity. Owner can withdraw the salary from the corporation or can take a dividend. So that's how the owner will be compensated for the services, but the corporation is separate from the owner. So the biggest advantage of the corporation is the liability, limited liability, like what we discussed in proprietorship and partnership, that the partners or proprietor, whoever running the business, has the unlimited liability. But in the partnership is in the corporation is the liability is limited. So this means if somebody sue the company or any other loan or anything, then the liability of the owner is limited to the amount he or she invested in the corporation. So their personal asset, that house or car or any other investment that is secured or is not be inherent. There is no risk for that thing, unless the director or the owner of the company give a personal guarantee. That's the only other scenario that they might be at risk. But other than that, the personal properties are not at risk. So another major advantage for the small corporation, especially the that has the income of up to $500,000 for the federal. So their tax rate is very low. For the 2020 is about roughly 12.20% for federal and Ontario tax if you combine both. So that's the major advantage of the corporation. And this doesn't mean that this is doesn't mean that you don't have to pay tax. But at this time, that as long as the you don't withdraw all the profit from the corporation, this can be considered as a deferral of tax. So you only pay tax when you withdraw from the corporation. But as long as your all the profits that you think you don't need at this time remain in the corporation, you are paying only 12% or 12.2% tax on that. So that's advantages as compared to the proprietorship or partnership, that your personal tax, if it's over $200,000, you are paying 53%. So here, if even over $200,000 profit, this is 12.2%. So that's biggest advantage for having a corporation. So other advantage for the corporation, you can say, is the capital gain, that you have an exemption that up to over $800,000 of cash. If you're selling your shares to some other person, like you want to sell your corporation, then any capital gain up to $800,000 is exempt from the taxes. So that's the biggest other advantage you have. So now we can discuss a little bit disadvantages of the corporation. So that is the business structure, the higher setup cost or administrative cost. So like you need to find decide that, okay, what will be the name. You have to register the name, you have to register the corporation, you need to decide on the classes of shares, who will be the shareholder, and all these type of things that is very important when you are setting up the corporation. So then it's better to have any professional advice on that. So that's when you set up your corporation, so everything is taken care of, so you don't have complications later on. The other disadvantage, you can say, that the corporation losses cannot be written off against the personal income tax or any other income. As we already mentioned earlier, that personal and the proprietorship and partnership has this advantage that any losses of the partnership or proprietorship can be written off against the other income that you might have. Say salary income, you can deduct the losses of partnership or proprietorship. But in case of corporation, as we discussed, that corporation is a separate legal entity, so any losses of the corporation cannot be deducted from your personal return or personal in other income. So that's the a disadvantage. However, corporation can carry over the losses and can use in the future when they have income to deduct those losses, but it cannot be deducted against the personal income or any other income of the directors or owner of the corporation. And also, corporation require more administrative work, like as mentioned, separate bank account, you need to file the WSIB, HST, payroll and taxes, all this, and corporate tax return, of course. So these are the additional work that is required if you set up a corporation than proprietorship and the partnership. So today this is what we discussed, and I hope you got some information on that, and hopefully we'll discuss later more.